What's up everyone, my name's Robbie, this is Robbie Manila, and today we're talking about the best consumer staples ETF. So here we are, this is the very last video in my series about the best sector ETFs. It took a while to make all of these. I've made 11 of these videos because there's 11 sectors. But hey, I hope you've enjoyed these videos and I hope they've helped. So as per usual, the first question is, how is the consumer staples sector done recently? So here we are in our favorite graphic. So I'm actually filming this in 2022, so don't worry about these totals here. Let's focus on 2021's return first. So here we can see the S&P 500 had an amazing year in 2021 with a 28.7% return. And if we take a look at consumer staples down here, it had an 18.6% return, so it did underperform the overall S&P 500 index. And as you can see, over the past few years, consumer staples has actually underperformed the index. It underperformed in 2020, in 2019, in 2018, 2017, 2016, and finally in 2015 was the last time that it actually outperformed. But as you can see, this was a year where the S&P 500 didn't do very well, so you could consider this maybe a bit more defensive. So consumer staples hasn't outperformed recently, but there has been a crazy bull market going on, and consumer staples is a bit more of a defensive sector. So anyway, let's go ahead and let's figure out what the best ETF is for the consumer staples sector. All right, everyone, let's go ahead and get started. But first, I do have a question for you. I want to hear from you in the comments below. Did you like this series? This is my 11th video in the series. I hope you liked it. Let me know in the comments below. I'd love to hear from you. And if you can think of a different series that you would like to see, just also let me know. I'd love to hear that as well. So today we're going over 4 consumer staples ETFs. The ETFs we're going over are VDC, which is the Vanguard Consumer Staples Index Fund ETF. FSTA, which is the Fidelity MSCI Consumer Staples ETF, XLP, which is the Consumer Staples Select Sector Spider ETF, and finally, we have RHS, which is the Invesco S&P 500 Equal Weight Consumer Staples ETF. You know how these videos go. Let's start with the expense ratio. The first one we have VDC, 0.10 expense ratio, FSTA, 0.084% expense ratio, XLP, 0.12% expense ratio, RHS, 0.40% expense ratio. As per usual, we have to ask a question. Does RHS justify a higher fee than these other ones? That's one of the things we're going to have to answer while we go forward. Moving on to the yields, and as consumer staples ETFs, these actually have really good yields for general ETFs, for sector ETFs. VDC, we have 2.14% yield. We have a FSTA yield of 2.42%. We have an XLP yield of 2.57%, the highest of these, and then we have RHS with 2.17%. Let's take a look at the fundamentals. So we have a price to earnings for VDC of 25.1, FSTA the exact same price to earnings, XLP very close to the same, and then RHS just a little bit lower, so very close price to earnings ratios. The price to book, they're pretty similar. VDC, FSTA are the exact same, XLP slightly higher, and then RHS lower than the others, but they're all pretty close price to book, price to earnings ratio wise. Let's take a look at the Morningstar ratings. Let's start with the 5-year return. We have a 3-star for VDC, FSTA with a 4-star, XLP with a 4-star, and then we have RHS with a 3-star. FSTA isn't actually old enough to show a 10-year rating on this, but we do have one for VDC, which is a 3-star. We have XLP, which is a 3, and RHS, which is a 4. Let's also take a look quickly at the 3-year. We have a 4 for VDC. We have FSTA with a 4, XLP with a 4, and we have RHS with a 3. Next, we'll look at the weighting scheme. Now, I go over this all the time in all the other sector videos. I think at this point, you probably know what they are. So the weighting scheme of VDC is market cap, FSTA market cap, XLP is market cap, and RHS is equally weighted. Next up, we have the returns. Let's start with the 5-year return. So 5-year return for VDC, 11.13%, FSTA, 9.91%, XLP, 9.76%, and RHS with the lowest return over 5 years with 8.15%. Let's take a look at the 3-year. VDC with an 18.02% return for 3 years. FSTA with a lower 11.07% return for 3 years, so a lot lower. We have XLP with a 3-year of 10.70 and RHS with 8.46. Let's just take a look at the 1 year, even though it's kind of, a bit too short term to really tell a lot, but let's take a look at it anyway. And we have VDC still killing it with a 17.61% return, FSTA 9.17, XLP 7.87, and RHS 5.36. The final thing we'll do, let's take a look at the 10-year, even though FSTA is not included in this list. We have VDC 12.13% return, the highest for the 10-year returns. Then we have XLP 11.18 and we have RHS 11.83. Now let's take a look at the portfolios of these ETFs. Of course, they're going to be very similar because they're, sector-based ETFs. So we have Procter & Gamble is the number 1 for VDC, Procter & Gamble, XLP, Procter & Gamble. Of course, remember RHS is a equally weighted ETF. So they're going to have very closer percentages because it's going to try to get an equal weighting for each of the companies that it invests in. VDC for the second company is Costco for all of them, except of course RHS. Then we have Pepsi. This one, FSTA has Coke instead of Pepsi. XLP has Coke. So as you can see, consumer staples companies inside these consumer staples ETFs. Last thing I want to take a look at here is the market cap weightings of these different companies inside of these ETFs. So if we take a look at VDC, the majority of it is inside giant cap companies. As you saw just now, the companies that I just mentioned. FSTA, also pretty much the exact same thing. XLP, a little bit higher of a giant cap weighting. And then RHS has the lowest giant caps of all of these. We have VDC with the large cap of 24, FSTA with 26.30, XLP 30.0, RHS 28.40. So what you're going to see here is that XLP slightly more weighted to the larger companies than FSTA and VDC. RHS is going to have more of the large, medium companies in its weightings. All right, so now we have to pick a winner. What is the best consumer staples ETF? What is it? So the answer to this question is, of course, it's VDC. So VDC has just a slightly higher expense ratio than the Fidelity ETF FSTA. FSTA having an 8.084% expense ratio, VDC with a 0.10% expense ratio, so barely more. And then, of course, we have great returns for VDC, really killing FSTA actually. So the 3-year 18.02% versus FSTA 11.07%. VDC on the 5-year also doing a lot better. So VDC is our ETF for the best consumer staples sector ETF. Let's take a look at the returns versus the S&P 500. So as you can see, VDC having a much higher return than VOO, which is the S&P 500 ETF from Vanguard. Why is this? Basically, VDC is a much better sector ETF to have when there's a defensive type bear market going on. VOO being better in a bull market, and of course, it's been a crazy bull market recently. So let's take a look now at VDC's technicals. So in terms of technicals, looking at a chart of VDC going back until about 2018, you can see big uptrend channel since the pandemic started. VDC is now at all-time highs up here in the 201 area. Now there is something I don't like seeing in this chart, and it is the fact that MACD and RSI, I don't love how they're looking. RSI is definitely in the overbought territory, which means that I think that this is probably going to have a bit of a downturn coming up soon because also it's at all-time highs. And if we take a look at this and say, well, maybe this could be a resistance line soon, we can go all the way back down maybe to this support area of 180, let's say 189 area. So it's possible this thing can drop from 200 to 189 to the next support area. And then that's when I would take a look and see if it bounces back off of that support area or if it goes back further. And if it does go further, there's another, let's say, support area at about 181. And that's kind of what I would do. So if I was trying to time an entry into this position, I would say because of RSI being so high and MACD honestly coming back down and maybe going to turn over down here soon, I would just watch it right now. I would wait to enter a position and I would see if it comes back down and maybe test this 189 area. So that's all I have for this video. Thanks so much for watching. If you like this video, if you like the series, please hit that like button, subscribe to see future content like this. I'll try to do some more series similar to this. And of course, I have another video coming up on the end screen Should probably watch it. It's coming up right now.